Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, let's begin locally, and with the ASX 200 having recently pushed close to record highs, Jason McIntosh from Motion Trader has a near-term bullish outlook as he sees prices becoming established above the moving averages.
I think the near-term caution comes from what we're seeing in the ASX 200 equal weight index. I've got a chart of that. That's interesting to have a look at, because what's happened when we look at this equal weight chart is that there's been that quick reversal from January's all-time high, and with that prices, well, they pretty much gave back all of January and December's rally, and that happened all in just in a couple of weeks, gave all that back. So this is a very different sort of price action to what we've been seeing previously with the equal weight. So if you just look back at like what was happening last year, for instance, there were strong rallies followed by short and shallow dips as buyers quickly soaked up the supply. The pullback we've seen now, well, it's quite a bit different. It's quite a bit sharper. I don't think that ends the uptrend, but it does do some technical damage, and I think it opens the prospect maybe for some more consolidation over the next few weeks, or at least the next few weeks. Like one of the possibilities is we see a bit of a range develop between the high and the last week's low. I think it's important to watch how this develops in the next week or two. The upshot of all this is that I want to stay long stocks, but I'm a little bit cautious on the timing.
Well, with the big rotation out of tech stocks underway, let's now focus on a SaaS company that has been hurt by market fears of the AI threat. Michael Gable from Fairmont Equities examines the technicals for Pro Medicus.
Still getting asked questions, is it now time to buy Pro Medicus or WiseTech or Xero? And look, I don't hate the companies. I think they're brilliant companies. We've made a lot of money out of Pro Medicus, 360, WiseTech, T&E, you name it, we've been in it, but not for about at least 6 months now. So if we have a look at this long-term chart of Pro Medicus, we could see that up until a couple of years ago, there was a particular trend taking place, and then this sort of momentum trade feedback loop just got out of control, and obviously it rallied from about $100 to over $300 in a very short period of time. That's unwinding. I think if we look at the whole AI narrative and being overblown and thinking, okay, well, we should be buying this, it's a great company. Yeah, it's a great company, but it's probably still not, worth a PE of, whatever it is now. I mean, 70, 80, take your pick. There's still an unwind happening. I think it's going to revert back to the long-term trend. We could see PME under $100 before it stabilises. And this is true for most tech stocks. So I still believe the unwind is happening.
Energy has been one of the most unloved sectors. However, Michael Gable says it's starting to break out now and sees the sector as one of the biggest opportunities in 2026. He focuses on the Sprott Physical Uranium Trust.
Uranium Miners ETF has just recently broken to new highs. But if we have a look at this particular, this is a physical ETF, it's based overseas, but it just gives us a good representation of what's happening with the uranium price. Yes, it's increased quite a bit in the past couple of years, but this one's also just on the cusp of breaking out. So this overall pattern is very similar to the one that I highlighted in silver a year ago. We know what silver did. So I think uranium has immense upside this year, and there's obviously ways to capture that on our market. So this is where I think our viewers need to be looking, not trying to buy the falling knives in Aussie tech.
Well, that's it for this edition of the Charts to Watch. Join us for more technical talk next week. Happy trading.